Hi all, it's February 27th, 2018. We've just gone through a period of really high volatility on the S&P 500. It's now returning to normal. There's a lot of people saying the liquidity is not back, and it isn't back 100%, but the way it's behaving is kind of back to normal. So the way I see it is we have a lot of the same short-term players back in the market, so we can expect the market to behave in certain ways. What I'd like to just focus on today is a couple of points just after the open. Quite often before the open, we'll mark out here areas of high volume that built just before the open, and then we'll watch the extremes of those areas to see if there's any activity that indicates those areas might hold. And that behavior has kind of been absent since we started that period of high volatility from the 5th of February. So what we're looking at really is, has that behavior returned? And then obviously if it's returned, then can we start to take advantage of it? Okay, you can see what's traded on the way up. We've traded a couple of hundred a level. We traded 609 at the open, but you can see as we've moved up, we're stuck now at 2760. Now as we enter the trade, it resets the volume trading. We can still see we're stuck. So over 1,000 contracts hitting to 60. So this behavior, just a reminder that those that don't know, it is a very fast behavior that happens close to the open. It's not something you have a great deal of time to make a decision, but you can see there probably 20-30 seconds where we just couldn't get through 2760, and then the market's starting to fall away. So let's just have a look at what happens when we get to the other extreme down here at 5775. Moving on, we can see we're now at the lower end of that high volume area from overnight. We can see the X's on the left. Look at the volume trading into 57.25, 500 contracts so far sold there. Haven't managed to get through. Pretty much the same kind of action that we saw at the upper end of that area. And this is just very typical of the way the S&P behaves, or rather the way it did behave before the 5th of February when we got the high volatility. So for me, with the few things I saw last week and the things I'm seeing here, this kind of action, it just tells me we've now got the same kind of participants behaving in the same way in the market again that had kind of disappeared at the 5th of February and appeared from then to now. So I think what we can do is we can start saying, okay, the market's sort of back to normal. We can now start applying some of the same techniques or expecting the same behaviors that we did before the 5th of February. I know a lot of people got their fingers burnt at that time. A lot of people actually came to order flow brand new for the first time and are like, oh my God, what's going on? So now we've got a market. It's still a little bit thin. It's still not the most liquid market in the world, but behaviorally, it's starting to repeat the same behaviors that we can expect from the S&P 500. So I think you can be comfortable in re-engaging with it.